Welcome to Quick Invest Brief. You've probably heard a lot about Bitcoin ETFs, especially the ones that actually hold Bitcoin. The idea is simple. Big money flows into these funds, they buy more Bitcoin, and the price goes up, right? Well, not exactly. If you're wondering why Bitcoin's price hasn't exploded into orbit despite huge ETF inflows, you're in the right place. Today, we're uncovering the hidden forces at play, revealing why the picture is far more complex than it seems. Get ready for powerful insights, briefly told. Let's dive in. First, a quick refresher. There are generally two types of Bitcoin ETFs: futures Bitcoin ETFs. These are older. They bet on Bitcoin's future price using contracts, but they don't actually buy or hold real Bitcoin. So, their direct impact on Bitcoin's price is much weaker. Spot Bitcoin ETFs. These are the game changers. They directly buy and hold actual Bitcoin to back their shares. When you buy a share of a spot Bitcoin ETF, the issuer has to go out and buy real Bitcoin. This is what should push prices up. So, why are these spot ETFs such a big deal? They make Bitcoin accessible to millions of traditional investors. Think pension funds, financial advisors, and even everyday people who prefer their regular brokerage accounts. This legitimizes Bitcoin as a serious asset and opens the floodgates for mainstream money. And crucially, while the US approval of spot Bitcoin ETFs in early 2024 was monumental due to the sheer size of its market, the ETF party is becoming increasingly global. Canada, for instance, had spot Bitcoin ETFs years before. In Europe, similar regulated products called exchange-traded products, or ETPs, which also hold actual Bitcoin, have been widely available. More recently, financial hubs like Hong Kong have launched their own spot Bitcoin and even Ether ETFs. This global trend towards regulated Bitcoin investment products amplifies Bitcoin's legitimacy and accessibility, attracting capital from many different regions and further integrating it into the global financial system. It's true. If inflows into these spot ETFs are strong, the issuers must keep buying Bitcoin. This does create genuine demand, which is fundamentally supportive of Bitcoin's price. Conversely, if there are massive outflows, like when the Grayscale Bitcoin Trust converted and saw significant selling, that can certainly put downward pressure on the price, as they have to sell Bitcoin. So, on paper, more ETF buying should equal higher prices. But the reality is more nuanced. This is where it gets interesting, and it's a major reason why the price might not be skyrocketing as expected. Large institutions, wealthy individuals, and even governments rarely use public exchanges or ETFs for their massive Bitcoin purchases or sales. Instead, they often deal through over-the-counter, or OTC, desks. Why OTC? Imagine a giant whale trying to buy or sell hundreds of millions of pounds worth of Bitcoin on a public exchange. That huge order would crash the price instantly. OTC desks allow for private, direct deals between two parties. No market impact. These transactions happen off-exchange, meaning they don't immediately hit the public order books you see. This minimizes market disruption and allows for discreet execution. Privacy and negotiation. Institutions want confidentiality and often negotiate better, custom prices for such large blocks. They can also avoid the management fees associated with ETFs. So, a lot of the real institutional and governmental buying and selling isn't immediately visible to the public market. This means the demand is there, but it's often absorbed privately, not always creating the dramatic upward pressure you might expect on public exchanges from ETF flows alone. Another crucial factor is the behavior of old Bitcoin holders selling privately. The arrival of regulated ETFs and renewed institutional interest has created a perfect exit ramp for early Bitcoin adopters and whales who acquired Bitcoin at much lower prices. As new demand comes in through ETFs and OTC desks, these long-term holders might see it as an opportune time to take some profits. This supply entering the market balances out some of the new demand, leading to a more stable or even sideways price movement, rather than a massive surge. It's a natural process of wealth transfer and market maturation. While ETFs are a huge new factor, Bitcoin's price is never just about one thing. Overall economic health. Global inflation, interest rates, and investor sentiment in traditional markets still play a huge role. If the overall economy is struggling, even Bitcoin might face headwinds. Regulatory news, new regulations, or even rumors of them in major countries can cause big price swings. Technological developments, upgrades to Bitcoin itself or wider crypto innovations can also influence sentiment and price. Ultimately, the introduction of spot Bitcoin ETFs and similar products globally is a massive step for Bitcoin's journey. It brings immense legitimacy and liquidity, making Bitcoin easier for mainstream investors to access. While it might not lead to immediate, dramatic price rockets every day due to the factors we've discussed, like OTC deals and old holders selling, this institutionalization could pave the way for greater stability and broader adoption in the long run. It's a fundamental shift in how Bitcoin is bought, sold, and held globally. What are your thoughts on Bitcoin ETFs and their impact? Let us know in the comments below. Don't miss our next brief. Subscribe now to get more powerful insights, briefly told, delivered straight to your feed.